Hello traders, welcome back to my channel. Okay, basically a pip is the primary unit of movement or measurement. It can also be said to be the smallest amount by which a currency quote can change. For example, the smallest whole unit movement a currency pair can make is 0.0001. Alright, nearly all currency pairs consist of 5 significant digits, and most pairs have decimal points immediately after the first digits. So if the quote currency in any pair is USD, then 1 pip equals 100 of a cent. Notable exceptions are pairs that include the Japanese yen, where a pip equals 0.01 because its exchange rate extends only 2 decimal places past the decimal points, not 4. Alright, hey guys, don't get confused yet. Today we are going to be talking about this important aspect of forex trading, pips. Alright, I will be discussing what are pips in forex trading, their value, and as well show you how they are calculated. Understanding pips is crucial when it comes to managing risk and making informed trades. Here is where we are going to do a little maths, right? Take your time with this information as it is a required knowledge for all forex traders. Don't even think about trading until you are comfortable with the pip values and calculating profits and losses. Alright, let's head right into the video. Once again guys, welcome back to Rity Trade Hub Forex Beginners course. What is a pip? Okay, a pip is a basic concept of forex. A percentage in points, or pip for short, is the measure of change in a currency pair in the forex market. It is a tool of measurement related to the smallest price movements made by any exchange rate. Okay, the acronym can also stand for a percentage in point and price interest points. Currency moves generally in forex are measured and calculated in pips. So guys, pip is the bedrock of everything. I repeat, everything we are going to be doing in forex. If you miss the concept of pips, believe me, your foundation is going to be shaky all through your forex journey, right? Currencies are gauged in pips, trade orders are placed in pips, movement in the exchange rate is measured by pips, profits are calculated in pips. Practically everything we are doing in forex involves pips. So take your time to understand this very important topic. Let's now fire on. In practical terms, a pip corresponds to the fourth decimal digit, that is 0.0001. Okay, most currency pairs are measured to 5 decimal places. For pairs like Euro USD, a pip corresponds to the fourth decimal digit. Okay, yen-based currency pairs like USD JPY are the exception, okay, and are measured to 3 decimal places, and the pips correspond to the second decimal digit. And basically, pips represents the change in the quote and value of a position in the market you may have taken. Let's now get to how to calculate pips. Okay, this is where I need maximum concentration. If you were distracted before now, please stay focused from now onwards. Okay, for most currency pairs in forex, we start calculating the pips from the fourth decimal place. However, there are few exceptions. Like I said earlier, we would start with the general ones, okay, before we go to the exceptions. So from the Euro USD here, you start calculating pip from the fourth decimal digits, which is 0. Okay, so before I start, let me repeat, the pip is being calculated starting from the fourth decimal place. So ignore that number spark scripts beside all the other pairs. However, the fifth decimal doesn't really affect the price as it changes really quick. Okay, it's usually called the pipettes. Okay, so currency moves generally in forex are measured and calculated in pips. So if Euro USD, which is at 1.1840, makes a move of 1 pip, its new value would become 1.1841. So how did I get that? How did I get 1.1841? Okay, now a single pip equals the smallest change in the fourth decimal place. Okay, that is 0.0001, right? This implies that 1 pip equals 0.0001. So the move made by GBP USD is 1 pip. I would have 0.0001 multiplied by 1 pip which is equal to 0.0001. If you have a calculator there, you can impute that so that we flow. All right, so I would now add this 0.0001 to the original value of 1.1840. okay, we would now have 0.0001 plus 1.1840, which is equals 1.1841. All right, that was how I got that figure. So I could as well add just 1 to the fourth decimal place number there, which is 0, and it would increase from 0 to 1. All right, but in the second method, we just directly added 1 to the fourth decimal place number of that value of 1.1840, and we immediately got 1.1841. All right, the first method looks longer, but that's the actual calculation. It's the real way of calculating PIP. So let's fire on, guys. Let's fire on. Let's see have another example. Okay, let's take a look at GBP USD, that is the pound versus the US dollars, which is at market price of 1.3031 as seen on your screen. If GBP USD makes a move of 2 pips, I will simply add 2 to the fourth decimal place of 1.3031, and I would have my answer as 1.3033. Let's see the long method. For the long method, okay, since I was told that markets made a move of 2 pips, remember that originally I told you guys that 1 pip for a 4 decimal place currency pair is 0.00001. all right, 1 pip is equal to 0.0001. So the move made by GBP USD is 2 pips. Then I would have 0.0001 multiplied by 2 pips, okay, which is equal 0.0002. I would now add 0.0002 to the original value of 1.3031. right? We would now have 0.0002 plus 1.3031, which is equal 1.3033. okay, same answer with the above, right? Okay, so let's go a little bit higher. Assuming we were now told that GBP USD made a move of 10 pips from 1.3031, okay, we would as usual add the figure 10 from the fourth place decimal number, and we would have a new value as 1.3041. okay, let's now see the long method again. Using the long method, the move made was 10 pips. Remember that 1 pip is equal to 0.001. So 10 pips would be 0.0001 multiplied by 10, which is equal to 0.001. Guys, what did you notice on the screen? What can you see on your screen? Right? You notice that the zeros reduced. It's no longer 0.0001, but rather 0.001. So the zeros reduce. So to get the new value of GBP USD, we have 0.001 plus 1.3031, which is equals 1.3041, right? Same answer here. Okay, so I know someone would ask, since the shortcut is easy, why teach us this long method? But guys, as we go higher, it gets more complicated, especially with numbers that are not round numbers. So let's go ahead. Now, for most currency pairs in Forex, the pip calculation starts from the fourth decimal place. Okay, now there are some currency pairs that are not up to fourth decimal place. Some of them have specific ways of calculating them. The pip calculation starts from the second decimal place digit. If you notice that it's not up to the fourth decimal place like others that we did before. Example of those pairs are the JPY pairs, all right? Example are the USD JPY, the Euro JPY, the GBP JPY, ED JPY, and others. Another example is gold. Let's see some examples, okay? Let's start with the JPY pairs. Example is the USD JPY. From here, USD JPY, let's say, is currently at 130.42. Okay, if it makes a move of 2 pips, the new value would be 130.44. How did we get this? We added 2 to the second decimal place number, which is 2, and it increased to 4. That's how we got 130.44. Let's go to the long method. Okay, for the long method, you should take note that for JPY pairs, 1 pip is equal to 0.01, no longer 0.0001 like we saw for other general pairs. So let's use the long method to solve the example here. Okay, remember that for JPY pairs, 1 pip equals 0.01. So since it's made a move of 2 pips, right, we have 0.01 multiplied by 2 pips, which is equal to 0.02. Adding 0.02 to the original figure, it would now become 0.02 plus 130.42, which is equal to 130.44. Same answer as above. Okay, so I have a little assignment for you. Okay, kindly drop your answer in the comment section. Okay, if the price of Euro USD goes from 1.2133 to 1.2139, how many pips did this pair move? A, 6 pips up, B, 6 pips down, C, over 9,000 pips, and D, I have no clue. Guys, I would like to see your answers in the comment section. Okay, so let's proceed. Here we have calculating P value. Okay, to calculate P value, guys, you divide 1 pip, usually 0.001, by the current market value of the forex pair. Then you multiply that figure by a lot size, which is the number of base units that you are trading. Okay, to get the value of 1 pip in a currency pair, a trader has to divide 1 pip in decimal form, that is 0.0001, by the exchange rate, and then multiply that by your lot size, all right, for the dollar value of your profit, or the dollar value per pip. Okay, the value of a pip depends on the currency pair, the exchange rate, and the trade value. Okay, you multiply a trade value. For example, when your forex account is funded with US dollars and USD is the second of the pair or the quote currency, just like in Euro USD, in the pair USD is the second of the pair. All right, so in this case the pip is fixed at 0.0001. right? The value of 1 pip is calculated by multiplying the trade value or lot size, which is the number of the base units that you're trading. So you multiply that by 0.0001. So this is how you would calculate any currency pair that have the US dollar as a quote currency. All right, as I was illustrating, okay, for the Euro USD pair, you multiply a trade value of say 100,000 euros by 0.0001. The pip value is $10. So if you bought 100,000 euro against the dollar at 1.0801 and sold at 1.0802, that is a bullish move of 1 pip, and you would make a profit of $10 for just 1 pip. On the other hand, when the US dollar is the first of the pair or the base currency, such as with the USD card, all right, just as you can see on your screen, just like the USD card, where USD is the base currency, no longer the quote currency. Okay, the pip value also involves the exchange rate. In this case, you divide the size of a pip by the exchange rate and then multiply by the trade value. For example, 0.0001 divided by a USD card exchange rate of 1.2829 and then multiplied by a standard lot size of 100,000 base units, okay, results in a pip value of $7.79. So this implies that if you bought 100,000 USD against the Canadian dollar at 1.2829 and sold at 1.2830, that is a bullish move of 1 pip. So you would make a profit of 1 pip or $7.79. Okay, so guys, you can use this to calculate your stop loss and take profit. Ensure you understand this concept. Okay, you can go over this video one more time to be able to understand this concept, right? You can also get the pip calculator on the Baby Pips website. All right, so you can actually do your calculations there if this method is not convenient for you. All right, once again, ensure you understand this concept as it will be helpful in your trading journey. If you are not clear, like I said earlier, you can go through this video one more time to better get clarified. All right, so let's proceed. Remember that the Japanese yen, the JPY pairs are quoted with 2 decimal places, marking a notable exception to the 4 decimal place rule. Okay, so for currency pairs such as the Euro JPY and USD JPY, okay, the value of a pip is 100 divided by the exchange rate. Okay, for example, if Euro JPY is quoted at 132.62, 1 pip is 0.01, right, divided by 132.62. okay, then multiplied. If you use your calculator to do that calculation, let me see over here. So we would have 0.0000754, okay, 0.0000754 multiplied by a loss of 100,000 euro, or base unit of 100,000 euro. Okay, the value of 1 pip in USD would be 7.54, guys. So guys, that's it on pip. I hope you've been able to understand this concept. If you are kind of lost, like I said earlier, you can go through this video one more time. But if you would want me to hold your hands and walk you through this process, through the concept in a systematic, simplified and comprehensive way, okay, then you can go ahead and click the link in the description box. You can send me a mail or hit me up in any of my social media handle and get started. Okay, thank you so much for watching this video to this end, and I'll see you in my next video.